a number that should change how you think about your e-commerce business. Amazon now has fewer active sellers than it did 5 years ago, down from about 2.4 million to 1.65 million. The casual sellers are getting squeezed out. Meanwhile, sellers based around China now make up more than half of Amazon's top 10,000. What do the winners have in common? They treat selling as a real business, real sourcing, real structure, real compliance. And for thousands of them, that structure is a Hong Kong company. So, can you actually run your Amazon or Shopify business through a Hong Kong company? Short answer? Yes for Amazon. Yes with a catch for Shopify. And there's a tax truth on both that most videos won't tell you. I'll cover all three, plus the exact documents you'll need. Let's go. Why sellers choose Hong Kong. First, why sellers specifically, beyond the general advantages we covered in our Why Hong Kong video? Picture a seller in London sourcing phone accessories in Shenzhen, China. With a Hong Kong company, her suppliers are one border away from her corporate base. She pays them in renminbi, collects from Amazon in US dollars, and holds it all in multi-currency accounts because Hong Kong has no capital controls. On top of that, Hong Kong charges no VAT and no sales tax on her company. Profits tax is a simple two-tier system, and if her operations are genuinely offshore, potentially less than that. We've covered exactly how in our profits tax video. And when Amazon's verification team looks at her paperwork, they see a jurisdiction they process every single day. Which brings us to what Amazon actually asks for. Amazon Seller Central, exactly what you need. Hong Kong is on Amazon's official list of accepted countries for seller registration. You can sell on Amazon US, UK, Europe, and Japan through a Hong Kong company. Here's your checklist. 1. Your certificate of incorporation and your business registration certificate. Amazon wants both, and here's a tip that saves rejections. Upload them merged into a single file. 2. The ID of the person verifying, passport or Hong Kong ID. The name must match your company documents exactly, character for character. Name mismatches are the #1 avoidable rejection. 3. Proof of address issued within the last 180 days. 4. A real credit card. Amazon doesn't accept virtual cards for the seller account. 5. A bank account for payouts. And here's genuinely good news for remote founders. This doesn't have to be a traditional Hong Kong bank. Amazon runs an official payment service provider program, and licensed Fintech providers, including Airwallex, Payoneer, Wise, and Aspire, are on the approved list. If a traditional bank account has been your bottleneck, as we covered in our banking videos, this route is fully legitimate. Just confirm your provider is on Amazon's current approved list in Seller Central. It's updated regularly. Then, verification, a video identity check, and, the step nobody expects, Amazon mails a physical postcard with a code to your business address. If nobody's checking mail at your registered address, your registration stalls right there. Remember this, it's coming back in our mistakes list. Shopify, the catch nobody warns you about. Now Shopify and the catch I promised. Shopify itself works fine with a Hong Kong company. But Shopify Payments, the built-in payment system with the best rates, requires your business to have verifiable physical presence in Hong Kong, not just a registered address. That means a real office, a warehouse, or a contract with a Hong Kong logistics provider that actually ships your orders. And the payouts must land in a Hong Kong-located Hong Kong dollar checking account in your company's exact name. And note the sharp contrast with Amazon. The Fintech route generally does not work here. Shopify explicitly requires a checking account with a bank in Hong Kong. Money transfer services and accounts that mimic bank accounts are not supported. So the same Airwallex or Wise account that happily receives your Amazon payouts will typically be rejected by Shopify Payments. If your Hong Kong company is purely remote, founder abroad, no local operations, Shopify Payments will likely decline you. The workaround is legitimate and common. Use third-party payment gateways instead. It works, you'll just pay Shopify's extra transaction fee on top. The takeaway? For Amazon first sellers, Hong Kong is smooth. For Shopify first sellers, plan your payment setup before you incorporate, not after. The tax truth, what Hong Kong fixes and what it doesn't. Now the part that separates honest advice from sales talk. A Hong Kong company gives you Hong Kong's tax treatment. It does not make taxes in your customers' countries disappear. Here's the real map. Selling to the US on Amazon? Good news! Under marketplace facilitator laws, now in every US state that charges sales tax, Amazon itself collects and remits the sales tax on your marketplace orders. You don't handle that money at all. But 2 footnotes. Storing FBA inventory in a state can create obligations there, and anything you sell through your own Shopify store is your responsibility once you cross a state's threshold, commonly $100,000 or 200 transactions a year. Selling to Europe? Same pattern. On Amazon, for typical parcels under 150 euros, Amazon is the deemed supplier. It collects the EU VAT for you. On your own Shopify store, you're the seller of record and need an IOSS registration through an EU intermediary. And a fresh development. Since July this year, the EU also applies a small flat customs duty, €3 per product category, on low-value parcels. Brand new, and most guides haven't caught up. And Hong Kong's side? No VAT, no sales tax, just profits tax, with the offshore question we covered in our dedicated video. That's the honest deal. Hong Kong simplifies your corporate layer brilliantly. Your customer country obligations travel with your customers. 4 mistakes that sink seller setups. Mistake 1, the postcard fail. Registering with a virtual office where nobody checks the mail, then losing weeks stuck at Amazon's address verification? Make sure your registered address service actually receives and reports mail. Ours does, but whoever you use, ask. Mistake 2, name mismatches. The company name on Amazon, the bank account, and the BR certificate must line up perfectly. One limited versus LTD can trigger manual review. Mistake 3, assuming Shopify Payments will work with 0 Hong Kong presence or with a Fintech payout account. Decide your gateway strategy first. Mistake 4, the silent one, ignoring bookkeeping. A seller account generates thousands of small transactions in multiple currencies with fees deducted before payouts. Reconstructing that at audit time is expensive. And remember, every active Hong Kong company gets audited annually. We made a whole video on that. Clean books from day one aren't optional. They're your audit insurance. Summary, your seller setup checklist. Let's compress this into one checklist. Amazon accepts Hong Kong companies. Prepare your certificate of incorporation and BR certificate as one merged file, matching ID, recent proof of address, a real credit card, and a payout account, a traditional bank, or an Amazon-approved fintech provider. Expect video verification and the postcard. Shopify works, but Shopify Payments needs real Hong Kong presence and a real Hong Kong bank checking account. So pick your payment gateway before you incorporate. Amazon handles US sales tax and most EU VAT for marketplace orders. Your own store's sales are on you. And Hong Kong side stays simple. No VAT, 2-tier profits tax, annual audit. Get those 4 things right, and a Hong Kong company is one of the strongest structures an international seller can run. How Captime can help. At Captime Corporate Management Limited, we work with e-commerce sellers every day, so our setup is built for exactly this playbook. We incorporate your company with marketplace verification in mind, documents prepared the way Amazon expects them, a registered address service that actually handles your verification mail, and your BRN ready for Seller Central. Then we keep the engine running. Bookkeeping built for high-volume marketplace transactions, audit coordination, and profits tax filing. If you're planning your seller setup or your current structure is causing verification headaches, book a free 15-minute consultation at captime.hk or use the link in the description. No credit card, no obligation. Structure beats shortcuts. Sourcing position. Banking flexibility. Global credibility. The sellers thriving in this market aren't the ones with shortcuts, they're the ones with structure. A Hong Kong company, set up properly, gives you the sourcing position, the banking flexibility, and the credibility to compete with the best. Set it up right the first time, and it just works. Thank you for watching. If you found this video helpful, please like and subscribe for more practical content on Hong Kong company setup, tax, and compliance. See you in the next video.